Hello, Anthony.
Hello, Claudine.
Sorry, I interrupted your
That's
coffee.
right. It was.
We're joined today by Keith Redmond, an American overseas, I would say global advocate,
That's right.
seeing how much he fights tirelessly. Keith, thanks for joining us today.
Well, thank you for having me back.
We really want to.
Appreciate it.
Oh, sure, anytime. We want to focus on some tax traps for people who are or are considering becoming U.S. persons. Quickly, I think we should touch on an update since we talk to you so often about FATCA and Territorial Taxation for individuals. FATCA was, it's right now has been tabled, the Repeal FATCA. That doesn't officially mean no, but it is a bummer. But there is, you said, still a lot of work going on behind the scenes for that, correct?
Exactly. So it's not over. It's not over. It's going to be a fight. That's a given. And but it's far from being over. And there's a lot of work that's being done behind the scenes in ensuring that we get a repeal of FATCA. There is no fix to FATCA. That's the bottom line, contrary to what some individuals and organizations may say. There is no fix. Even the Department of Treasury came out and said they would not accept the fix proposed. We are about a full repeal. And because I deal with the damage and discrimination every week, literally every week, this is not hyperbole, this is the only thing that we can accept is a full repeal. So I just want to tell the people who are listening that it's not over.
Okay.
In fact, I sent someone new over to Keith this morning, someone who I talked to, and his description of FATCA, finding out about FATCA, he said it felt like a piano falling on his head.
Oh.
And just a really, really good guy who is a fan of Americans. He's just, what is this? He's just quite confused, and he is shut out of the right now, as of now, and hopefully Keith's got some of his suggestions to help him out. He's shut out of the French banking system for new things. So I know Keith has helped people in the past, and hopefully he can help this before the repeal of FATCA comes, because it's coming.
These people. One last point. I mean, think about it. He's a known American. I mean, he knows, or his wife, I think.
Yeah, that's
American. Right. But think about the people who never even knew they were American. Yep. They had no idea. Yeah. They were born in the U.S. and left in diapers. They left before they could even go to the bathroom on their own. And I'm sorry to be so crude, and then they find out later on that they're American for tax purposes.
Yeah.
Anyway.
Yeah.
It's a tough situation, but the fight is not over.
So it's stay tuned for podcast. Maybe subscribe to the channel.
I was going to mention that.
Yeah.
You should subscribe right now when we have the update.
Exactly. Yeah. We'll be able to talk further about it. Absolutely.
Okay. So now, of concern, a section in the tax reform package we want to talk about is a 14% excise tax on deferred income for CFCs. It is a one-time tax, correct?
That's right. It's a one-time tax. And it makes sense, at least why it's out there, because you have all these corporations that have been deferring income for years, and now the corporation tax is changing to a or to a territorial system. And so I guess the drafters of this bill in Congress said, well, boy, these companies are going to get out of it. They've been deferring so long. The deferral lasted so long. We changed the law, so they'll never pay taxes on this. So the purpose of this law, as far as I can tell, is to capture some of that deferral, and it's a one-time. After this, there is no more tax on it. And from what I've read, there's an 8-year repayment on that, and there's an article from Kevin Nightingale that on LinkedIn, pretty thorough, and he updated this fairly recently.
Now, Keith, you said you have a document from John Richardson that explains a lot.
Yeah, it does explain a lot, and he's, I gotta call him a fellow warrior.
Yeah.
And what I mean by that is Mr. Richardson is a tax attorney in Toronto, and he has been part of this fight in getting justice for not only the 9 million Americans overseas, but all the other affected populations like the accidental Americans, the border babies in Canada, and other countries' citizens who are caught up in the U.S. tax system, and they shouldn't be. But I think there's a couple key points to really hone in on here is that this 14% excise tax, just to be very detailed about it, is actually an 18% tax on individual shareholders. who don't get the benefit of territorial taxation. And right now it's a 14.9% tax on corporations which do get the benefit of territorial taxation. So keep in mind, because individuals did not get territorial taxation for individuals, but what is being passed is territorial taxation for corporations, there's and I think the word in English is incongruency or disconnect now with the tax system. And so individuals actually are going to be paying even more than what the 14.9% excise tax will be.
Yeah, I actually, the thesaurus says it's a complete screwing is what we're looking for, because it's a double. We have a double taxation because, again, the corporations are escaping the U.S. system overseas. And so, okay, here's the way to get some revenue before they, before the final goodbye. But here, individuals are still subject. And they're getting it as if they aren't going to be subject, but they will be. And so it's a pretty nasty thing. And I saw that some of the other concerns is that this is a U.S. tax that you're paying. It's an excise tax. And the country that you're in might not treat it as a tax that's eligible for a foreign tax credit because it's not an income tax. It's an excise tax. So there's some additional problems with that. So, I mean, you're really rolling together a really nasty little package here in this one law that sort of has at least it has a good purpose. I guess my question is, and you're on the inside of this, Keith, why don't they just eliminate it for individuals? Because it just doesn't apply.
Yeah, I know, it's a good question. I think it's a tough one because everybody, the system is from country to country is so different that I think the United States, if I may say this, be bold enough to say, is only looking at this within how the U.S. does it and is not taking into consideration Americans overseas who have small to medium-sized businesses, because unlike the United States, and this is what John Richardson was getting at in what he was sharing in regards to the problem of this, unlike the United States, it's very common for individuals to carry on a business through a small business corporation. U.S. residents can incorporate a small business and use the quote-unquote entity classification rules to redefine, for tax purposes, the corporation. But other countries, you're a corporation, even if you have a small business. So as you can imagine, there are going to be a lot of Americans overseas who are going to be stuck in what to do. And the choices are not pretty. Go bankrupt, renounce, or not comply with the U.S. tax system.
And really,
Those
I think
are
that
the three choices
in number three, the not comply, I think is going to start to make a lot of sense to most people because, well, why go bankrupt? And I think who would willingly go?
Why would you do that?
Why would you do that? You would just say, okay, well, I'm going to just, roll the dice on this and not comply. So, and as I was reading this, and I think this might be the thing that most people in Congress, just don't see. When I'm looking at these laws, it starts to see, okay, I know individuals who this is going to affect. And I know the mess this is going to make. And I know when I tell them, okay, this is how much work it's going to be required to try to straighten, just to get to the point where you have a nasty tax bill, right? That's going to be painful enough. And now here's the nasty tax bill that you really didn't want to do. And these are,
it's even nastier, Anthony. It's even nastier because it's retroactive.
Yes, right.
Oh, wow.
Yeah, really. Yeah, because it's on your built up. It really is. So it's retroactive, and the whole. I would say one of the foundations of our legal system that is protecting expectation interests. That's always one of the big foundations of things. Whenever you look at contract law, property rights, it's your expectations. What are the parties' expectations? And the law generally doesn't allow you to totally throw out what someone's expectations are, except when it comes to tax law. That's where, the law, a lot of the things of equity don't necessarily apply. Congress passes these things and they don't quite see through that's the thing. With tax reform, you are playing with people's lives here. And these are powerful things you have that I don't think they fully appreciate how this impacts real people. And I think this is our biggest concern, or one of our biggest concerns, is just the lack of a true constituency. The offshore people just don't have that, and that's something that we want to change. Keith and I have been talking about changing that.
And keep in mind, Americans overseas who have small businesses and medium-sized businesses, guess what they do? They want to use American services. They want to grow. They want to hire Americans. And the U.S. right now is making it more difficult, where they can't do it. They can't do it, and they can't even survive as a business.
That's right.
So it's counterproductive to what the ultimate goal is supposed to be.
That's
and
right.
This is what's not getting the airplay, which
right.
is very important.
Yes.
When if you're and this is for anyone listening to this who says, "Oh, this really won't affect me." Well, it's like, okay, well, if your son and daughter is going to school and is top of their class, engineering, there's a good one. Engineer, Americans tend to be pretty good workers around the world, and have a different way of problem solving, so really can make a valuable member to a worldwide team. Really can. It's hard to have a worldwide team without a few Americans on there. But their opportunities aren't there. They could have had this exciting fun job in, say, Hong Kong, but that's not there for them anymore, because they're not going to get that job because you're a U.S. person and you're tainted.
Or my favorite is when
it keeps this bubble around the United States, which really shouldn't be there.
Yep.
And that's the part that is really not acceptable.
And people forget how often, yes, you could get a job overseas, but my favorite is when people fall in love and they move overseas. And that happens so much.
Right. And you could be in the U.S. and your dream girl or boy is in your economics class, and you had no intention, but she says, well, I'm moving back, so what are you going to do?
Yep.
I guess I'm going to go with you is the answer. And that's incredibly common for people. That's a huge thing. So have, but now your child, but
or you're overseas, Anthony. You're overseas and you meet somebody, or you're in the military.
Yep. Oh, yeah.
A lot of people are in the military
absolutely.
and they fall in love with somebody in Germany or Japan or France or the UK.
Okay, so now on the flip side, I want to talk about, people are enraged about some things that are being proposed in the current tax reform package. Anthony, you said there's an issue in there in the current package that people are ignoring. And again, it's on the flip side, because now we're talking about people that would like to become U.S. persons. So what's that issue?
Yeah. So, as I look, people are now interested in tax reform. It's in the news, and I think that's a great thing. I think it's a great thing that people pay attention to what goes in there. Too many times, the tax law impacts everything in your life. It's the most important law, and people just says, well, I'll just let my CPA take a look at it. No. You need to know. You need to be a part of this. And so as I see people get outraged over certain things, I look at what they're outraged over as like, that's a small thing, and you actually, might not have it right. That doesn't really have a big impact. But what I think about is things that currently exist. And when I think about one of the, there's some real outrages out there. And I'd say the number one thing that really bugs me is this issue when someone becomes a new U.S. person. And I wrote an article on this last year, and I just updated it, sort of for this. But it goes something like this, that we had a client who he found the love of his life in New York. They were living in Switzerland. Her mother got ill. They moved back. He became a U.S. person in 2013. He was sitting on some substantial assets, okay, when he became a U.S. person in 2013.
Okay. A
lot of it in gold, okay? Now, if we know anything about gold in 2013, it was still doing pretty good. Well, now couple years go on. He needs to, okay, we got to pay for kids. All right, we're going to leave here permanently. We're going to buy a house. We're going to pay for kids' college. So he goes and sells a whole bunch of his gold for a loss since the date he became a U.S. person. So you'd be thinking, okay, yeah, you shouldn't owe anything on that. No. The U.S. tax code treats your basis in your property as the date of acquisition. The date of acquisition meaning before you're a U.S. person. So here's another retroactive tax. So the U.S. so that the taxing jurisdiction of the U.S. extends beyond to when you are subject to their tax jurisdiction.
Wow.
So that is one of the biggest outrages. And there was Keith and the Americans in our Facebook group, one commenter pointed out that in 1995, Senator Moynihan tried to get this done, and it just went nowhere. Again, because you look at the constituency, no one can really get that going. And so I was just, I get fired up about this, but then Keith added a little something extra to it during our call. You want to tell me about that extra? If you think you're outraged now, wait till you hear what Keith says.
Yeah, and this is something, again, that doesn't get a lot of airplay, but if you are an expat from another country and you're in the United States and you have a green card for more than 8 years, you are treated like a U.S. person. And what that means is that after that 8-year limit of having a green card, let's say you decide to go back to your home country. Let's say it's France. I just use France because I'm tied to France, but it could be any other country. You go back to your home country because of work or personal reasons, or in fact, you go to another country. You're French and you go to another country because of work. You have to formally give up your green card, okay? Of course, you can move overseas. You can move back to France and still be a green card holder for a certain period of time, but you'll be subjected to U.S. taxation under citizenship-based taxation. However, if you choose to formally give up your green card, if you reach the threshold of $2 million, if I'm not mistaken, you will have to pay an exit tax. Now, keep this in mind. This is not for the 8 years that you have been a green card holder. This goes back until, even when you were in France. So let's say, I would give an example. Let's say you had money prior to becoming a green card holder. All that is taken into consideration when you have to pay the exit tax. So let's say you get right before you get the green card, your parents passed away and you inherited their home, let's say in France. Okay, that's going to be part of the exit tax. That's going to be calculated in. So it's actually retroactive from prior to you getting your green card. Therefore, there are, no exaggeration, other countries' expats who are stuck in the United States because they cannot afford to pay an exit tax to get rid of their green card. And if they do go back to their home country, they're going to be subjected not only to taxation by the U.S., but they're going to be identified as a U.S. person and be limited in their home country for any investments or banking products which are there. So it's this Kafka-esque situation that is really bad. I was at the French ambassador's residence last night, talking to someone from the French embassy, and we were talking about that, and he's very well aware of the French expats who were stuck in the United States as a result. So that's another element.
Yeah, I don't know if Kafka quite had the imagination for this. This might be a little bit beyond sort of what he had in mind. It's like, wait, you guys are really crazy. Whoa. This is
the confiscation of assets.
This is so beyond, and exactly, and I think that's the thing. It's typically what we see is people inherited something overseas that's in the family, and it's a substantial asset. If you have an apartment in France, it's going to be worth a lot. It just is, and you're not doing anything with it. And you also might have your brothers, your siblings, are also on there.
Retirement,
right?
Before you took a job in the United States, and there was some little account with a retirement account that's going to be taxed as well.
That is right.
Based on for the exit tax.
And I did. I have a new client yesterday who did his calculations. He's like, "Yep, green card holder. Calculated. It's cheaper for me to be a U.S. to stay a U.S. citizen, even though, he's like, I don't know if I'd want to."
Where the real problem is with this is a problem in itself, but where there's a certain disingenuousness, if one can say that word, is that when someone applies for a green card in the United States or becomes a naturalized citizen, the U.S. government does not tell them this information about what would happen if you happen to take a job, fall in love, and you leave the United States. They don't talk about citizenship-based taxation. They don't talk about what happens with the green card, and that's a problem.
I am glad you mentioned that.
Bamboozled.
Keith, I'm glad you mentioned that because there is a fix to this. Okay, and because this is what somebody should tell you before you become a U.S. person. In the next 30 seconds or less, I could give you the advice that could save you millions of dollars. So listen very carefully if you're thinking of becoming a U.S. person, thinking of
you might
leaving.
identify what you mean by becoming a U.S.
If
person,
you're thinking,
Anthony, for some people.
if you are thinking of getting a green card, if you're thinking of coming to the U.S., okay? So before you do that, okay, understand your immigration attorney knows as much about taxes as you do, okay? So you're going to want to probably get a tax opinion, but I could say this. If you have substantial assets, what you do is you sell them the day before you become a U.S. person and you buy them back the next day. Now your basis is exactly what it is the date you became a U.S. person. So yes, you might be subject to the exit tax while you leave, but you're not going to be stuck with this insane gain that could go back in time. I mean, really, date of acquisition could be, if you're in your 70s or 80s and somebody gave you something in, 1945 after the war, you could have this incredible growth in the capital gain. So that right there could save you an incredible amount of frustration. And I wish, and I still look at the immigration paperwork that they give, and they still lead people down a blind road. So please let people know. Get tax, and an immigration attorney knows nothing about tax, or I shouldn't say that. Most know very little about tax. Don't expect them to give you tax advice. They should. Immigration law is hard enough to figure out. There's a lot of there's a lot of weird things there.
Yep.
Get tax advice before you become a U.S. person. It could be a really quick call that could save you an incredible amount of money.
I was so surprised at the amount of clients we got, either expats or people looking to become a U.S. person, who said, my immigration attorney never mentioned taxes at all. Like, it wasn't even a conversation.
And it's shocking. It's shocking
it really
that
is.
An immigration attorney doesn't do that, and it's shocking that the U.S. government doesn't do that, because they're making an assumption that these individuals will spend the rest of their lives in the United States. Many of them probably will, of course, but life has its twists and turns. And it's better to be armed with the information before you make such a major decision as becoming a green card holder or becoming a citizen of another country.
Oh, there's one more thing I just thought of.
Okay.
Because this is in the tax reform package. They're getting rid of the death tax.
Okay.
Okay. So, right now the exemption is $5.44 million. If your estate's over that, you could be subject to the estate tax, but if it goes away, hey, you die, there's no tax to pay anymore. Now the exit tax, the purpose of the exit tax was that, well, you're going to be getting out of the estate tax, so we need to hit you with the exit tax.
Oh.
So when I heard about the estate tax going away, I'm like, okay, so they're going to get rid of the exit tax then, because then there's no purpose to it anymore. Well, there's that constituency problem again. No one is really quite that interested in the people seeking to renounce citizenship. And I think we just got to look at, this is not the American way. The American way is not to screw people. The American way is not about just saying, all right, you're a little guy, go screw yourself. We're going to hit you anyway. That is not how it's done in America.
Anthony?
Yeah.
We're losing the best of the best through these renunciations. And these renunciations are not done in haste.
No.
They are done, thought through, and very emotional.
Absolutely.
They don't want to do this.
That's
Many
right.
of them. Sure, there are some that could care less. Got to be honest about it.
Yep.
But the majority of them, they don't want to do this.
Yeah. It's agonizing,
angry.
right? Yeah.
Okay. Well, Keith, I want to thank you again for joining us today and remind everyone that as we get updates about tax reform, about FATCA, about territorial taxation for individuals, we stay on top of this. You're always, you know what's going on. You are our voice from Washington.
Well, he's making it happen.
So yeah. So
Voice from overseas as well.
Yep, from France, from Washington. So like I said, make sure people subscribe to our channel, because they'll get updates whenever we do a new video, and they can stay on top of this as well. So again, Keith, thank you for your time today, and we will talk soon.
No, thank you very much. And if I may say, also for anyone that wants information, to come over to the American Expatriates group on Facebook as well, along with the IRSMedic site.
Yeah, I have learned, I have learned a lot of, there are a lot of smart people on there who comment, and I've learned a lot of stuff on the Facebook group. So I would definitely recommend it.
Yep, because the Facebook group is people that are actually living this. They are living overseas, and they are experiencing issues.
There's some real brain power there too. Yeah, there really is.
And just a little bit of information, I think it's important. and we're also taking a look at the opportunity, because there's a definite white space or void in forming an American overseas organization that really puts the priority for Americans overseas, and also the problem with accidental Americans, because there's a definite void there.
Yeah.
So stay tuned.
Excellent.
All right, great.
All right, well, if you have any questions or concerns, don't hesitate to contact us. It's 888-727-8796. You can also email info@irsmedic.com. And thank you so much for watching today.